Welcome to Financial Education for the Nation, and my name is Warren Shute. In today's episode I want to talk to you about inheritance tax. So inheritance tax is the tax that we all pay on our estates when we die. So we don't pay it on the first penny, we all get £325,000 of estate tax-free or taxed at 0%, and then the excess over that is potentially taxed at 40%. Now if we're married and we pass assets to our surviving spouse, they pass, as long as we have a will, they pass free of tax. Okay, so this tax then will only become payable on second death. But what also passes across is the nil rate band of £325,000. So let's run an example. When I pass away and my assets pass to my wife now has my £325,000 plus her own, so she has £650,000 taxed at 0%, and then the excess is taxed at 40%. Now £650,000 for a lot of people at home, particularly if their mortgage is paid off and maybe some life insurance policies that aren't written into trust, bank accounts, that kind of thing, is not going to be enough. So then have introduced in April 2017 the main residence nil rate band. So this is completely in addition to the normal or standard nil rate band, and this is starting off at £100,000 per person. That £100,000 will increase over the next 4 consecutive tax years, so 100, 125, 150, and then it will become in 2020 £175,000 per person. When the first person passes away, it's also inheritable by the surviving spouse. So what we have here is an additional nil rate band which is only used against the main residence or the downsale proceeds of the main residence if you've downsized, as long as the assets pass to your direct descendants, and that's defined as your children and grandchildren. So let's run a scenario now. We'll fast forward to 2020 when the main residence nil rate band is now at £175,000. Husband passes away, passes everything to the surviving spouse, so they have the £325 plus the £175, so she inherits the £500,000 allowance. When the wife passes away, she has her own £500,000 plus her deceased husband's £500,000, so she now has £1 million of assets that she can pass to her children, primarily, tax-free. What happens if your estate exceeds that amount? Well, the tax rate of inheritance tax is 40%. Anything over the nil rate bands will be taxed at 40%, and that tax has to be paid before probate can be granted. Most people find that if their estate exceeds the nil rate bands, the easiest, most flexible and cost-effective way to arrange that is to fund a life assurance policy. The life assurance policy premiums are paid normally each month. The proceeds of that life assurance policy are written into a trust, so in the event of the second of the couple passing away, the proceeds are paid into trust, allows the executors to access that money, pays the tax bill, and then probate can be granted. There are of course lots of other ways you can plan for inheritance tax which are a lot more complicated and probably not for this video. But I hope that's given you a good idea, a good summary of what the inheritance tax position is like in the UK. My name's Warren Shute, and this has been Financial Education for the Nation. Thanks for watching. Please connect with me on social media: Facebook, Instagram, LinkedIn and Twitter. I'd love to hear your feedback.